The things I'm about to tell you in this video I basically haven't heard anyone else talk about. So here are the 3 secrets that are actually ruining your trading. Number 1, you don't know the fees on your exchange. This is more important than you might think. In the last video we talked about finding a strategy with a small edge that you can repeat over and over so you make money. There is one problem though. If you pay huge fees, you are actually going to erase all of your profits. So how do you avoid paying too much fees to your exchange? There are 2 things you can do. Number 1, research your broker and their fee rate. I live in Europe and I use Binance, Bybit and MEXC. But let's say you live in the US or India or somewhere else where Binance is not available, you can still use Bybit. And if you choose to use other exchange, it's still not a problem, but what you should do is open the spreadsheet and see what their fee rates actually are. When choosing the right broker for you, try to go with the more mainstream ones. For example, like OKX, MEXC or so on, because the others are a bit shady. And the second thing, and the most important in my opinion, is using limit orders instead of market orders. So what's the difference between a market and a limit order? The biggest advantage of a market order is that you enter into a trade quickly, because you're basically telling your broker to enter at the best price that the sellers are willing to sell for, or the opposite. But there are 2 problems with that, and the first one is that the fees are almost twice as big as with a limit order. The other problem, if you trade pairs or stocks with low liquidity, you are going to enter in a very bad place because of the spread. This is devastating, especially for scalpers. Limit orders, on the other hand, are pending orders that the buyer or seller are placing at a particular price or level. The problem with limits is that if the price doesn't hit the level where the order is, you are not going to get filled and not going to be in a trade. So a crucial skill for every trader is to be able to set limit orders quickly so they can enter into the trades faster. By the way, this is the spreadsheet for Binance. As you can see, market orders are twice as expensive as limit orders. Mistake number 2 is not knowing what you actually trade. Many traders trade only BTC, US30 or 1 or 2 assets. And there is a good reason behind it. Every asset, stock or pair moves in a slightly different way. Trading crypto, for example, has nothing to do with trading forex, and I've tried them both. So I would recommend making a list of 5 to 10 pairs that you're going to backtest and actually trade, that have high liquidity that you can master. This would also help you avoid some new shitcoins that come out and have low liquidity or high spread. And the third mistake is not using the right leverage. In trading, there are 2 factors: great strategy and great risk management. And leverage is one of the biggest parts of having good risk management. To determine what leverage you should use, you should know 2 things. Number 1 is your win rate, and number 2 is your max drawdown. And you can calculate them. I have a video about backtesting where I talk more about that. But a good rule of thumb is, if you have high win rate strategy with low profits, you can actually have higher leverage. And on the other hand, if you have a low win rate strategy with high rewards every time you win, you should lower the leverage. And by the way, when I say high leverage, I don't mean a leverage of 20 or 30x. These are crazy numbers, especially for beginners. You don't need anything more than 7 to 8 leverage. So if you want to master your strategy, watch this video. And also, if you want me to make a video about a certain topic, comment down below. See you in the next one.